What's up, investors? It's the Russian dude. Let's briefly talk about three interesting things in like under 20 seconds. To begin with, right here you have the earnings report for this week, so feel free to pause the video to see if any of your companies are reporting. Then is the fear and greed index, both for the stock market and the crypto market. As you can see, stock market gets closer to 41, gets closer to neutrality, and Bitcoin crypto market is once again in the greed zone of approximately 71 out of 100. And finally, right here you have the map which shows the biggest GDP per capita in the world, and basically the wealthiest country according to this map is Luxembourg with approximately $131,000 per person. But okay, now let's talk Apple slowly losing its biggest investor, and I'm obviously talking about Warren Buffett's Berkshire Hathaway. Long story short, recently he sold 13% of its position in Apple, which is approximately 115 million shares. And some people even assume that this biggest Apple buyback in its history, worth of $110 billion, which they did announce recently, was to simply cover this supply and demand ratio, because if Warren Buffett just keeps selling stocks non-stop, this will obviously drop the share prices significantly. So Apple had to kind of do this buyback in order to neutralize things. Most likely the reason he is doing this is because Apple is not maybe as innovative as he used to see them in the very beginning, even though he still likes the company. But according to the official explanation by the Berkshire Hathaway, they needed this money to pay taxes for other profitable investments that they made earlier last year. Now let me give you an ultra quick update from the crypto market, and then we're gonna talk about the stock market and potentially growth signals forming right now as we speak. And to begin with, this last week was one of the biggest netto outflows from the Bitcoin ETFs, which was worth approximately $600 million. And then on May 3rd, Friday, in one single day, there was one of the biggest inflows into Bitcoin ETFs worth of approximately $378 million in a single day. And this is a pretty crucial information to know, because yes, Bitcoin halving still happened kinda relatively not that long time ago, and right now the volatility is still high, so it is pretty much every single week is different. One week it's downtrend, one week is the uptrend. Well, right now with this much influx, it was able, at least at the moment of recording this video, boost Bitcoin's price all the way to $65,000 from one of its lows about $59,000. And now, as promised, let's briefly talk about the updates from the stock market. First of all is a pretty interesting graph about showing unemployment, and as you can see, it was able to breach its 24-month moving average, which historically was a signal that unemployment will go higher in the near future, which is exactly what the Federal Reserve wants to see before they start reducing the interest rates. This is one of their requirements, and it is one of the biggest one. Because of this, as you can see, this so-called smart money, they started revising their interest rate estimations for the next several months and years. And well, that's why they're considered the smart money, because they always change their narrative. They always change their predictions like every single month, which obviously eventually at some point they make correct estimations. And that's why people think that they are smart. Next graph shows us the technical analysis of the S&P 500 index. Well, basically it was able to bounce off from its 100 days moving average couple of times, and then it was finally able to breach 50 days moving average, which potentially can be a good signal if you believe in technical analysis. And yet another potentially good growth signal for the stock market in general is this next picture, which shows that a lot of companies, they will start resuming their buybacks in the near future. Because during the earnings season, companies are simply not allowed to do buybacks within a limited time frame. There is like a blackout date basically, right? At this point, approximately 80% of companies already released their earnings, so buybacks will resume in the near future. And since 2011, companies doing buybacks was one of the biggest growth signals, one of the biggest triggers, which was always constantly in general on the long-term perspective, pushing the stock market uptrend. And well, if you thought that this was not yet enough growth signals, if you also remember my several previous episodes, I was talking about that whenever people are uncertain about stocks, shares, investing basically in securities, they switch to commodities. They see this as an alternative investment during uncertainty on the stock market. And well, right now, the situation is completely the opposite. Now, hedge funds, institutional investors, they increase their short positions, for example, in oil, obviously one of the biggest commodity, which basically means that they expect the oil prices to go down in the near future. When the oil prices go down, allegedly, the stocks go up. This is not a 100% relationship, but this is what sometimes it does happen. And ultimately, right here you can see inflows and outflows of different sectors on the stock market. And well, once again, right now, more risky investments, such for example, technological sector, they see much bigger inflows because, yes, they were significantly oversold, prices started to become attractive, and people started seeing them as more favorable opportunities, especially with the most recent jobs reports, and most likely assuming that the Federal Reserve will eventually start reducing interest rates as promised in the beginning of this year. But well, all this does not change the fact that the catastrophe with the US national debt still continues to accelerate in geometrical progression. Right here is the brand new fresh graph which shows that America spent only in the first quarter alone $1.06 trillion only in interest payments on the debt that they acquired themselves. This money, literally taxpayers' money, goes into nothing, goes into waste. This is just to maintain, just to service the debt, just the interest payments. This money did not go to repay debt or anything like this, just in interest payments alone. The situation right now is critical. More and more people start to pay attention to this situation. So let's see if things will change, because this cannot go on forever. You cannot simply kick the can down the road and expect that eventually the can will disappear. Guys, everything presented in today's episode was simply for research purposes. Please make sure to do your own research before you're investing your money. Thanks so much for watching. Please like this video and subscribe to my channel if you enjoyed it. I'm making these updates every single day, and then see you tomorrow.